Hey everyone, thank you so much for coming today. Firstly, can I get a shout out for Cooper Parry? I know they've presented every panel so far, but round of applause for Cooper Parry. And thank you so much to everyone who's been on stage so far. To introduce myself, my name is Liam Ward and I'm the Upscale Program Lead at Tech Nation. So we support this event with Cooper Parry. And in my role as Upscale Program Lead, I run a 6-month growth program for the UK's fastest growing tech companies. So super proud to have Melissa and the team on this year's program and to have had Sean on the program last year. Other companies we supported include Monzo, Bloom and Wild and Bowl. And so basically, as an organisation, we exist to support the UK's fastest growing companies and their leadership teams. So do check us out. There's lots of support that we provide that'll be relevant to many of you in the audience. Now, it was our pleasure to support Sean and the Blink team last year as they went through their scaling journey. So Sean, thank you so much for joining me today. We've already heard, I guess, a little bit about the seed journey at Ordu and their scaling journey. We've heard a little bit from Melissa on the Series A process. So we're going to talk a bit more about your Series B today, how that's changed and how that was different to your A round. First, can you introduce Blink to us, a little bit about yourself and what it is that you're doing?
Yeah, sure. So Blink is a mobile app for frontline workers. So nurses, care staff, logistics drivers. So the majority of bus drivers in London, for example, if you ask them, will have Blink on their personal smartphone and enables them to access everything from pay slips to shift swaps to being part of the organisation, so contributing, giving them a sense of agency in what they do so they can have a sense of say in how the companies run or what's happening. And we do that. We don't provide most of that functionality in the app. We integrate with existing applications to do that. So they open the app on their personal smartphone and they get one-click access, passwordless access to all of the other apps they need to use. So that's kind of what we do. It's kind of a one-stop shop for frontline workers.
And how did you come to, I guess, create Blink? What was the journey to founding Blink?
Yeah, so my previous company was a professional services company. So we provided kind of network and security engineers to big corporates. And the challenge we had in that company was everyone was based on customer sites, so we never saw them. So I had the challenge back in 2004, 2005, like how do you build a really strong culture? How do you keep your people when you never see them? So we ended up building our own software for doing that. And the kind of key insight we had through that was it's not just, you often think about that through, okay, it's a communication collaboration challenge, which it is. But actually, the way to get people to kind of really buy in is by being part of their daily habits and daily behaviors when you're not seeing them. So what we did was brought together these kind of like jobs to be done. So things I need to do every day, like fill out a timesheet or see my payslip or fill out a form, along with the communication collaboration thing in one app. And that kind of creates a really symbiotic relationship. So like Blink is probably, statistically, it's stickier than Tinder, Facebook, WhatsApp. People open it all the time, every day.
Sorry, could you just move your mic up slightly?
Sorry, mate.
That's all right. People at the back is a little bit there. Sorry about that. Sorry.
And so, yeah, it's by bringing those two things together in one place that we really create the stickiness and really enable sort of organisations to create culture change. Ultimately, what we do is drive up employee satisfaction and drive down staff turnover. That's kind of the business metric that we're trying to move. But we think about it in a bit more human way than that. But, yeah.
Great. And obviously, you know, support for frontline workers over the last 18 months, 2 years has been a huge, I guess, talking point. How have the last couple of years been for you on the scaling journey? What does that look like as the last couple of years?
Yeah, it's been a roller coaster, definitely. So we just found product market fit. We've been in the market about a year going into COVID. And I can talk a bit about what happened before that. It took us about 4 or 5 years to find product market fit. So I can talk a lot about all the mistakes I've made. And, you know, we were selling into forward-looking organizations, like companies that really wanted to change their culture. I think, you know, COVID has just accelerated all of those trends for us. So, you know, frontline workers are now front and center in all of our hearts and minds, I think. And, you know, there's not a company out there, especially with the kind of great resignation that's currently going on, that isn't trying to think about how they can change their relationship between the frontline workers and the rest of the organization. So, yeah, it's definitely become far more topical. We've grown from 12 people to about 70 today. We've grown revenues, I don't know, 5-6-fold. So it's been an interesting journey.
Brilliant. And before we talk about, I guess, your Series B and what that process looked like, you mentioned taking 4 or 5 years to get to product market fit. We've had 2 B2C companies that were awesome come up. getting into like the nitty gritty of B2B and kind of the enterprise software world. How was that process for you in terms of finding product market fit, and what did that look like?
Yeah, it was painful. Like, it really was on every level. I almost quit quite a few times. So if you think about it from a fundraising journey point of view, and then I'll back into kind of the business. So, we went out, raised the seed round. Let's call it raised an SEIS round of about £500,000 to get us kick-started. Hired an initial team, started to build out a product. Sold to our first couple of customers. We're like, okay, we've got something here. Went out and raised a sort of classic seed round, £1.8 million. Turns out we didn't have something. We thought we did and we didn't. We'd signed a couple of customers in the London Stock Exchange and a couple of other places. Because this mistake I made was we kind of built things originally for everyone. Everyone needs a great employee experience. Everyone needs a one-stop app on the phone. Turns out that's not strictly true. So coming out of that, I then raised a seed extension. I then had to raise another seed extension, which was a big down round. So I went through that whole journey. Had months where I couldn't make, half the month and couldn't make payroll at the end of the month, those kind of things. So personally, very stressful. But, I think we were very, very, very lucky to have a very, very, very supportive investor base. So all of those rounds were from the same group of investors. And they never looked to take advantage at any particular moment in time. The down round was perfectly reasonable. So we were very lucky around that. Also had a very supportive board and a very supportive team. So the core, actually going to have dinner tonight with the sort of core 13 people who've been with me now for sort of 5 years. So, but, underneath that, there were times when I drove the team too hard and definitely, there was definitely too much stress inside the organization. There was times when I drove myself too hard. But what we were able to do was just by going out and keep talking to customers. So when it became clear that we hadn't found product market fit, just put on our shoes and pounded the streets, to be honest, and just talk to anyone who would go. My head of sales, my only salesperson at the time, who's now my head of sales, used to call it amazing rejection. We'd go and show people what we were building and what we thought, and they were like, "Oh, this is amazing!" Yeah, but I don't know how I'd even tackle that and go away. I think. But we were lucky that we kind of found a frontline use case, understood that it was kind of unserved. There was lots of people thinking about it from a sort of news feed comms point of view, but in our mind that wasn't sufficient. Our background was very much kind of integrating with enterprise applications, so we were able to use that. And we were very, very, very lucky to find sort of what is still really our sort of anchor customer and a really forward-looking CIO at Stagecoach, who really took quite a risk on us at that point. The product wasn't really there, and we rolled out there, and it was incredibly successful. And we were able to use that referenceability to grow into the rest of transit in the UK, then transit in Australia, transit in the US, and then we grew into healthcare, and then and so that's kind of how we did that.
Great. And so the team now, 70 people, you mentioned, I guess, growing into different markets. Whereabouts are you based, I guess, geographically, markets-wise? And then we can dive into, I guess, a bit to that fundraising journey and then to the Series B as well. Yeah,
sure. So we've got about 40 people in London, 45 people in London. The second office we opened about 18 months, 2 years ago now was Sydney. Don't do that, stupid. Number of late nights and early mornings is a killer. And then we opened in the US. Well, we hired our first person in the US last January. And then we just had one person for the whole of last year. And then we've just, in the last sort of few months, gone from 1 to, I think we're 10, 11, 12 now, something like that, in the US. So I was out there last week and I'm out there again next week. So just trying to get that up and working at the moment. We're quite lucky in the fact that the US market's kind of pulled us in. So it's already our second biggest market. It's already our fastest growing market. So we were able to close quite a lot of business from here remotely. The joys of Zoom. Yeah.
Great. I guess touching on the seed rounds there, what are some of your learnings looking back from the kind of seed extension, the down round? What are some, I guess, before we get into the glorious Series B and the growth, what are some of the learnings from your perspective as a founder on those down rounds and those seed extensions?
Yeah, so I think this is all true in hindsight and was by accident. None of this was by design. So don't take this as some kind of I was really wise to that story. But we had a great group of what I call super angels who definitely, obviously, were about the financial return, but also I think kind of bought into what we were trying to do, and we're able to keep them pretty bought in. So we communicate to them really regularly. We explain. I was always very upfront with them, very upfront. When it wasn't going well, they knew it wasn't going well. I obviously tried to sell an optimistic story that we can get through this, but they're an amazing group of individuals. So there was 1 month when I couldn't make payroll, and HMRC owed us about £250,000 R&D tax credit. I can tell you They came to our offices. We weren't paying out. They came to our offices for a meeting that day, actually. And they sat down with us and they said, so we see you put in your ID tax credit. Like, yeah. They're like, yeah, it seems to meet all the criteria. I'm like, okay. They're like, yeah, we don't think it's reasonable, so we'd like you to reduce it slightly. I'm like, but it meets all the criteria. So we ended in a little arm wrestle with HMRC about the size of the R&D tax credit. And to be honest, that was our lifeline in those days. Like we needed that money each year to get through the year. We even actually one year changed our end of year accounting date to get the R&D tax credit to make it another few more months before we had to go out and raise again. So anyway, that morning I was on the phone to one of my investors and he said, how's it going? And sometimes you just catch someone in a really like vulnerable moment. And I was like, I'm fucked. I was like, meeting HMRC this afternoon. I don't think they're going to pay. I don't think they're going to pay out. I don't think they're going to pay us as much as we claim for. I can't make payroll this month. And he said, let me know how the HMRC meeting goes this afternoon. If they don't pay you this month, I'll transfer you the money today. And it was just like, wow, okay, that's really cool. But so what happened was we'd raised the £1.8 million round. I think it was at like £9 million pre-money. And then when we did the first extension, investors unbelievably agreed to do it at the same valuation. But then a year later, we'd actually just signed Stagecoach and a couple of the customers. So we're about 300k of ARR. But because we'd already done these extensions and like no one would touch us, basically it was a bad news story. Like ironically, we raised the cheapest round at the point where we just got traction. So we raised that round at £4 million. I can't remember if it was pre or post, but anyway, it hurt. I think one of the things we did really well that I'd highly recommend doing if you can was through that whole journey, it was just ordinary shares on a subscription letter. So there was no like stack of preference shares and there was no funny business. It was very clean. So although we've got quite a long cap table, it's actually a really clean capital structure. So if we ever had to sell the company in a dire situation, hopefully I wouldn't walk away with nothing. And it just kept everything very clean and simple. So I'd highly recommend if you can keep your cap structure simple to do that. We also had no investor agreement. It was again just subscription to ordinary shares. So it gave us a lot of freedom. It still felt like my company, even though all that was going on. I kind of didn't feel like I was working for investors or working for the board, which definitely kept me motivated. I think the other thing we did was in that £1.8 million round. It was actually meant to be £1.5 million round, but Partech Ventures from Paris came in as we were closing and said, "Oh, we'd like to participate." So we kind of just took. I was only knowing the 50-50, but took the money, 300k from them. That has turned out to be one of the best decisions we've ever made because Roman, who leads the C fund of Partech, has just been incredible. Like he's supported us so much through that whole journey, introduced us to investors using his capital reputation, using the Partech reputation. Pricing rounds, like even in the later rounds, if he was only participating a little bit, the first thing all the angel investors or other investors would ask is, "Are Partech in?" So that signaling that he provided as well was like really beneficial. So I think it was a combination of some of these factors that kind of we got through that journey sort of with our, well, some of my hair left's got a cap on today. I think the other thing through that was what was I saying? The Partech thing. The
signaling.
The down around signaling.
Don't worry about it.
All right.
Don't worry about it. So we move, I guess, now to the B round. Mm-hmm. Can you talk a little bit about what's just happened, I guess, in the fundraising process that you've just run, 18 months, 2 years forward from that? When you applied for the upscale program, you told me you'd done an £8 million Series A as well, which might have been bending the truth slightly, but talking about that story now, which I respect. So talk about the Series B now. What does that look like? How is that structured?
So yeah, when we kind of like lumped all that funding together, we never announced any of it and went, "Hey, look, we've raised this much money," which was true. We raised it over a lot longer period than it sounded like. So we came into this year. One of the benefits of the journey we've been on is we're very capital efficient. So we managed to get to about $2.5 million in ARR in our time of going to market, burning less cash than that. So that, like on a one-to-one basis, like we were spending $1 and getting $1 more than that. We were spending about 70 cents and getting $1 of ARR. So it's quite capital efficient. And actually for Q4 in last year, we hadn't burned any money. We've been cash flow neutral. So we came into this year in quite a strong position. and all of our metrics were really, really good. So we had like NPS was really high. We had net dollar retention over 140%. We had month-to-month growth rate was strong. We had a good quarter in that winter quarter last year. So all that looked really, really good. So we kind of got to a point where like, right, do we raise or do we not? Or do we could just keep growing this really efficiently as it was. But we wanted to accelerate. We thought we had a good product. It was, it's the customer feedback we get is insane. So if I'm ever having a bad day, just go and talk to some of our customers, and they really love what we do. Like we've never lost we've never lost an enterprise customers, etc., etc. So we wanted to accelerate. So we took the temperature of the existing investors, and they kind of were happy to put more money in and lead around themselves. So we agreed as a board that we'd probably go the internal route of existing investors plus maybe a bit of debt, but we just go and test the market and see what's going on, But we do that in a very focused way. So I made a list of like literally 10, maybe 15 funds that we'd love to work with. Like you can imagine the names, the top ones in the world, and just went out and spoke to them. For a whole variety of reasons that I can definitely talk about if you want. Like we didn't manage to get a term sheet from those investors. So I went back to existing investors and actually, that didn't work. Well, I didn't pitch it like that. But anyway, the net result was the same. Because this investor said, well, you haven't even been able to get a term sheet in the current market. There must be something wrong here. And they lowered the valuation. And I was just like, we're now in like March, April of this year. So I was like, entered this year really strong. Thought we could probably raise a good round externally. Thought we'd definitely raise a good round internally. Suddenly, it's April probably. Suddenly, we're in a situation where we didn't get a term sheet, we went externally. Existing investors are offering much worse terms than I was willing to accept. But they're still good terms, don't get me wrong. And at that point, because we had accelerated in January, we were now about 12 weeks off running out of cash. So what I did was went back out to the market again externally and ran a fast process, got a few term sheets, got a great investor, super happy, got really good terms. Talk about that in a minute. And then, we closed the round mid-August. We also took on, none of this is public, by the way. We haven't announced the round yet. Announcing next Thursday, so just keep this to yourselves. We also took on Workday Ventures as a strategic investor. We closed the round in late August, and here we are.
Great. And how much was that round in terms of
It was
size?
$20 million primary, $22 million in total.
Great. Worth saying, I guess the hard work always starts now again. It's the next stage is then building that again. In terms of, I guess, the process that you ran, what are some of your learnings from the process of running your Series B? How did it differ to the way you approached your fundraising previously?
Yeah, so I think you probably got to gist this by now that previously we had run pretty informal fundraising processes. Like, we'd had a deck, but that was about it. Maybe a spreadsheet with a financial, and a spreadsheet with a financial forecast for the next 2 years. That was probably about it. Whereas obviously this time was the investors were a lot more diligent, or they wanted to certainly run a lot more diligence. So the way we approached it was we were quite lucky. I think this is where the timing of TechNation came in really well. We had a lot of inbound. So we didn't really struggle to get to talk to the people we wanted to talk to. So we had a lot of inbound interest, so we were able to leverage that and just our network to get intros and stuff. And I did some cold emailing as well. Ultimately, with a business like ours, a SaaS business, it's all about the numbers. So we just we did build like a data room, and we did build like a Notion page, which seems to be the current trend that everyone's doing. But actually, it all came down to like this spreadsheet, this workbook that we built of like 10 spreadsheets, which was everything from balance sheet, cash flow forecast, historical cash flow, financial model, user metric, user cohorts. The most important one in enterprise SaaS is the MRR by month by customer, that breakdown. So you can see all the things like network, your gross churn, net churn, and how you close new business and stuff. And what was really useful was actually one of the first calls I had was with OpenView Ventures in the US, which are really like prolific kind of PLG, product-led growth investor. And they very helpfully took that data and broke it down in all sorts of ways, and then offered to read it back to me. They said no, but they said, we'll tell you why. So I took the call and took the offer. They said, hey, do you want us to explain to you why? We said no. And I said, yeah, that'd be great. So they actually ran me through the whole data, the way to think about it. That was super helpful because then I kind of understood where our weak spots were. So we're then able to kind of try and optimize how we presented the business. So for example, we had really high net revenue retention of like way over 140%. But actually they were then worried about the gross. So they were then worried about new customers coming in, and a lot of our growth is coming from existing customers, and we weren't winning enough new customers. And that then shone the spotlight on the quota productivity of each sales rep, which was definitely one of our weak spots. So I think understanding our strengths and our weaknesses and then being able to kind of fine tune the pitch around that was really, really important. But that spreadsheet became everything really. When people asked access to our data, we might have sent that spreadsheet, and it really had everything they needed in it and nothing more. So it didn't allow that kind of opportunity of the creep of kind of DD to come in. I think for us, for me anyway, I really buy into the fact that investors are an extension of your team. So when you're hiring investors, you should interview them the same way you should interview new hires. So looking for someone with good culture fit was really important to me. Ultimately, the board is a part of the team. So finding a partner that we were really comfortable working with and a team that we were really comfortable working with was probably the most important thing.
Great. And you mentioned the inbound that you were getting. I know a lot of people focus on outbound as well in terms of how you can go out and find those kind of 10, 15 VCs. How did you approach setting up an outbound process and creating that?
Really straightforward. Really, we made a list of the investors we want to talk to. Found a partner. This is really important. A partner at the firm that was most relevant to us, and then tried to find routes into them really through existing investors, through advisors, through any way we could. I did a bit of cold email outbound as well, which my tip for that is get it all in one sentence basically. So we've got 2 sentences. Very short sentence about what we do, and then just our metrics are these. So for an enterprise SaaS business, again, it's all based on the numbers. So to share what our current ARR is, or what our current month-to-month growth rate is, all in one sentence. So I managed to get meetings with top tier one funds just through cold emailing them. Choose your time of day as well. Like email them on a Saturday morning when you know they're gonna be on their own inbox and stuff. And I managed to get quite a few meetings with top tier funds just through cold outreach as well. But I think again we had good numbers, so I think that opened that possibility up. I think if it had been a more vision-based play or whatever, and then flip side on the weaknesses, right? So yeah, that is
no worries. And so on the Workday side of things that you just mentioned, strategics came up a minute ago talking to Melissa. How have you approached, the relationship with Workday, which is a very different process to going out and getting a VC involved? How did you go through that? Yeah,
so that was inbound as well, actually, last December. So I think the lesson from all this inbound stuff is we now take a lot more care over sort of curating our external profile in places that investors would look, whereas previously we probably wouldn't. We probably took that for granted a little bit. So initially very skeptically, well, they kept the cards very close to their chest. So you don't know why they're talking to you. So it was very difficult. You're kind of boxing in the dark. So we had all these calls with them where they weren't making it super clear what their intentions were. I was being advised, for all the right reasons, I was advised by our existing investors not to take on Workday Ventures as an investor. The sort of reputation of these kind of things is not great. The thing that swung it for us was Workday don't have an open API. So it's very hard to work with them and integrate our products. Our product relies on integrations. So the fact they were willing to open it up to us, it would give us a competitive go-to-market advantage. And as I was saying, we're fingers crossed about to close our biggest deal yet, which would be a Workday customer. So fingers crossed, it's looking really good. But it's very, very early days. But yeah, that's kind of it was that kind of semi. It's not strictly contractually exclusive, but that kind of like semi-exclusive access really is what kind of sold it for us. Especially in US healthcare is one of our biggest target markets, and Workday are really big in US healthcare. So that's kind of
almost the complete inverse of Melissa's story about here's your no-go list. You've got the openness there.
Yeah, although the thing about that is that they were very open with us at the start. To be honest, I think they've got the impression that they've kind of they've very much managed their expectations. Like they don't do sell through, they don't do sell with. Basically, like you're on your own pretty much. We'll do the product integration. You can come to our events and that kind of thing, but we can't really leverage their sales force. So yeah.
So we were stood by the bins, and you said this has been legally the most challenging round we've ever done. This has been a super difficult round for us. Talk us through some of the complexities with the B round that were hard for you and the team that we can learn some stuff from.
Yeah, so obviously we came into it with a pretty clean, as I said, capital structure, but I had a little laundry list of things I was trying to achieve with this round. If you imagine the journey we've been on, I kind of needed to either redouble down on the company or look to do something else. We've been through 5 years. My co-founder is 50 next week, and he was kind of thinking slightly different to me. He wasn't up for recommitting for another 5 years. Or that wasn't clear at the time. It still isn't clear now, probably. But we definitely wanted to lay the groundwork for that possibility to happen. We did some small secondaries as well, I mentioned earlier. So that complicated things a little bit. I very much had a view of how I wanted the company to run, so I kind of tried to optimize the process for that. So this is things like board consents, what happens if I leave, all this kind of stuff that was in the legals. I think what we did was it was agreed that we could create the starting point legal docs, which I thought was a big win. In hindsight, so what happened was it then took us 3 or 4 weeks to create the base docs after we signed the term sheet, which just created a whole load of pressure and tension and urgency that didn't need to be there. So we were kind of like on the back foot then when we went into the negotiations. What I didn't mention earlier, what I kind of alluded to earlier, as we came in to sign the term sheet, we were really running out of cash because we'd really put the pedal down on spend. And I knew that we were going to run out of cash during the negotiation, which is never a strong point to be in as a founder. So I made another mistake of my many mistakes of like, just before about to sign the term sheet, I said to the investors coming in, oh, by the way, we need to do a couple $1 million convertible from our existing investors just to get through the next couple of months. Is that okay? Because it has a term sheet. And they were like, what? So don't do that. That complicated things. And then, at the same time, we need to evolve the board. Very much, I recognise that some of my existing team were quite tired. At the same time, the board, I think, our chairman is ready for holiday. So we kind of had to start laying the groundwork for that and figure out how we do that. And I was trying to, sort of playing six-dimensional chess with yourself. Like, what if this happens? Then I want to be in this situation. I don't want to get back into this corner. I don't want this to happen. This is where obviously like really good legal advice is essential. I think the thing I would have done in hindsight is I would have engaged our lawyers much earlier in that process and explained everything I was trying to achieve, rather than classic Sean, like, 6 weeks in, I've got it all in my head, and I reveal the latest thing that I'm trying to do to our legal advisors or to the board. Like, by the way, it's this other moving part I didn't want to mention earlier. I didn't want to overcomplicate things. And actually, obviously, if people are smarter than me, I should just tell them everything that's going to happen and how we want to do it all. I was obviously, my shareholding was coming down and down and down with all these rounds I spoke about earlier. One of my biggest regrets is in the down round that I mentioned, I was advised by several very prominent London angels and London VCs to fix my cap table, quote unquote. I didn't want to fix the cap table because I didn't want to screw out early investors, But wisely, I ignored the advice. One of my investors is Simon Murdoch, who runs episode 1. And he wisely said to me, Sean, I think you need to take a harder look at this because it's going to scare investors in future rounds and it's going to need fixing at some point. And I sort of said, no. And I discussed it with the board and we decided not to do anything about it. And then coming into this round, I was definitely getting more and more conscious about, okay, like this is going to start affecting my motivation. So I definitely wanted to try and do something about that in the round as well. There was quite a few moving parts that we were trying to do at the same time. We had a loan note that we'd taken 5 years ago, only £100,000 and never converted, so we had to convert that. There was just lots of stuff going on. Through the secondaries weren't directly through the parties, they were through the company. So yeah, legally it was there was a few moving parts, definitely. We left it too late to get the EIS advance assurance. So then I mentioned we raised that convertible loan note, thinking we got loads of time, but then in the middle of August, still haven't closed around, I'm starting to run out of cash again. And I'm still got EIS advance assurance, which is a condition of the close because the angel investors want it. So then this is when I rang up you guys and I was like, do you know when the government didn't get us this advance assurance? Still haven't got it. And then it turned out we thought we submitted it and we had a screenshot of us submitting it, but they hadn't received it. And then we had to resubmit it again. And then we tried to get anyone to help us escalate it that we could. Yeah, it was all fun and games.
Yeah, sounds it. I guess in terms of the team whilst you were doing this, you're obviously going through an enormous amount of intensity and pressure there.
Yeah.
How did you set the team up with this? How did you start to think about, people talk about their fundraising journey, like very much being led by the founder.
Yeah.
As you scale, that becomes less scalable. How did you start to kind of approach that with the team?
I think like one of our values as a company is transparency. So historically, been very transparent with the team, shared board updates, shared investor updates, shared where we're at and why. Now, at the same time as we're doing this, we're growing the company from, I think we were like 30 people at the beginning of this year, so we're hiring. This is a long preamble to me saying I kind of screwed all that up, to be honest. I kind of dropped the ball. So I got to a point where I just couldn't do everything. And to be honest with you, updating the team and keeping them with me on what was happening was definitely one of the things that kind of just got dropped, to be honest. Not proud of that, but Yeah, so I kind of I don't think they knew much more than I'm working on it. You know, kind of go to all hands and I go, yeah, that's still going on. Told them when we signed a term sheet. But again, I'm not fully convinced that was the right thing to do because, yeah, there was, by the way, top tip, anything that you really matter about, get it in the term sheet, because as soon as you sign the term sheet, you lose most of your leverage. Not all of it, obviously, but definitely anything that's really important, put in your term sheet. So when we're negotiating, you know, and at that point, because we're exclusive, your only real card is to walk away. That's not true. It's slightly more nuanced than that. But I definitely felt like I was in a situation where I couldn't easily walk away because we'd already told the team and because and all the other reasons. So anyway, we did tell the team at that point, but after that, other than that, I didn't really tell the team much else. I don't know if that was the right decision or not, to be honest. But that's what we did.
Yeah. And so, looking beyond the Series B, how did you sell the vision, I guess, for what you would be using the funds for? At an A round, you know, we talk about the kind of things you might be using that capital for, proving out some of the like product market fit, etc. With the B round, what are you kind of starting to look to achieve as an organization?
Yeah, growth.
Is that international growth, product growth?
No, I kind of joke, but like, you know, in enterprise SaaS, month-to-month growth is all that really matters. It's the only scorecard that really, you know, cash efficiency is important, but right now isn't as important as maybe it has been historically.
Yeah.
So yeah, listen, we're looking growing out sales and marketing teams is the main thing we're using money for. Obviously, at the same time, we are growing out the product teams. We just doubled our product and engineering team, and we're about to double it again, so it'll be 4 times as big as it was when we started. It was about 8-9 people when we started. So we're just going through that at the moment. So we are definitely looking to build that kind of product moat at the same time. But no, it's definitely about growing out. For us, what we were looking for in a new investor was someone with deep experience in enterprise SaaS and someone who can help us bridge to the US. That was our primary sort of criteria. So we found that definitely in Next 47, who's the VC that led the round, and they've been incredible since we closed the round. They've just like we've got a sales enablement person currently helping us fix all our sales processes that they're throwing at us, and we've got a product advisor who's incredible, who's come on board helping us interview product leaders, like and a whole load of other like any help introductions to potential board members, like they've just thrown everything at us, so which is great. But yeah, it's for us, it's growth in the US market is the primary use of those funds and support that. One of the things we were looking to achieve in around when I mentioned earlier about internal versus external, I definitely oversimplified it. So what changed between January and April, May, when we made that decision to go external, was not only did we put the foot down on spend, but we also were hitting a whole load of blockers in the US around hiring. So we couldn't get any good VPs to join because they'd never heard of this British company with no funding, you know, where no one's ever been to the US because you can't travel. So achieving a valuation that kind of sets the kind of benchmark was one of our things that we wanted to do, and that enables us to attract top talent. So yeah, I think that's really opened. The US market is really starting to open up for us now, which is great.
Great. And you mentioned the market being quite hot. How did you find navigating that market? You mentioned you went out to the tier ones and kind of got a lot of no's. How have you found the market generally, and how, as a founder particularly?
Yeah, well, I think it's never been better. Obviously, we're not your kind of like overnight success story. So I think being conscious of your weaknesses is just important as being conscious of your strengths when you're fundraising. So for us, we don't have a great team. I'll say about myself. Like we don't have like some, you know, notable founders. Like I'm not famous and I don't have a great educational background or anything like that. So that we operate in a quite busy, noisy market. The whole space we're in is pretty fragmented. So from a competition point of view, there was lots of concerns. But if you part those things to the side, like getting in front of investors, getting excited about our numbers was relatively easy. So you know, I definitely think it's a good time to be fundraising from that point of view. But I'm definitely from, given the journey and beyond as well, I'm definitely from the school of sort of like being really picky about your investors. Times might not always be as good as they are right now. And I think you want people who are going to, stick by your side through the ups and the downs. And we've definitely had that historically, and we were definitely looking to replicate that.